So to kick it off, we're just going to go across the line, introduce yourself, tell us the fund or firm that you work for, and what you all specialize in.
Yeah, so my name is Terry Berlin. I'm the managing partner for a company called Kirinaga Partners. We're an early stage venture company that specializes in pre-revenue technology. We have an office in New York and we have an office here in Orlando.
Hi everyone, my name is Aya Saracheva. I'm an investor with Revolution's Rise of the Rest Seed Fund. We are a $150 million fund that does early stage investments in US-based companies located outside of Silicon Valley, New York City, and Boston.
Hello, my name is Tom Wallace, and I am the managing partner of Florida Funders. We focus on investing in early stage tech companies in Florida. We're a hybrid between a venture capital fund and a crowdfunding platform.
Jennifer Dunham, I'm a general partner with Arsenal, which is a Winter Park, Florida-based private equity firm nationally focused on logistics, enterprise software, and e-commerce, and healthcare IT, excuse me. We also manage the Florida Opportunity Fund, which is about a $120 million platform that is focused on early to execution stage companies here right in our backyard in Florida.
Great. And if I'm looking at my phone, I'm not texting, I have our questions on here. So the first thing, we're going to talk about cryptocurrency and blockchain. This is a hot topic, as everybody knows, in the technology space right now. Would love to get everybody's feedback. What is your thoughts on cryptocurrency and blockchain as a whole in terms of technology?
Do you want us to start? You want me to start?
Start wherever.
Okay. So I have two very different views depending on whether you're talking about cryptocurrency or blockchain. So I actually think blockchain as a technology has an amazing number of uses that we're starting to see, particularly anytime you're looking for a distributed record of ownership. It becomes really big in the logistics space. We have an investment in the cannabis world where you have to maintain custody from the moment that you buy a seed all the way through to the final product. Right? Blockchain is a fantastic way to actually manage that. Cryptocurrency, I'm not sure. Honestly, I think there's a lot of questions about how it's going to manifest itself, and it's right now, I think it's too risky, at least for us, to have any serious investment in.
I heavily agree with that. I think with blockchain, the central idea around having a decentralized platform, having trust be really at the center of that technology has many applications, and we've seen this in anything from real estate to insurance. We have an investment in a company called Flurry that actually helps enterprise customers build apps on the blockchain. And I think there's definitely, more confidence for us that that is a technology that is here to stay. Agreed that crypto, I think, is a little bit too early to be able to tell whether or not that is a technology that simply is here to stay, and that's partially due to a fairly early regulatory framework that exists for that technology and that currency, and the fact that there's just been trouble in getting mass adoption. It is perhaps useful in certain areas where you can't necessarily have trust in currency or money. It's less, I think, applicable to other regions and areas, and we've sort of seen that in the volatility with some cryptocurrencies.
When it comes to blockchain, I think I'll be a little naysayer here. I do think the technology is serious and here to stay, but technology, a lot of it's timing. And being too early can be as bad as being too late. And I think it's going to take blockchain a lot longer to evolve into real applications and real investment opportunities than maybe some other people think. So we haven't done any blockchain investments and not really in a hurry to do any. Cryptocurrencies, obviously, different story. I kind of echo what you guys were saying. I wouldn't trust Zuckerberg with Libra's falling apart, and I wouldn't trust him with my money. I barely trust him with my photos. So, who knows which cryptocurrency is going to win? Are there going to be winning cryptocurrencies? I do believe that is going to happen, especially third world countries. I think what Zuckerberg was trying to do with Libra was more aimed at third world countries that don't really have stable currencies, and it's the US dollar and maybe the euro. So I do think there's a tremendous opportunity, but picking that winner, I have no idea how to do that.
Yeah, I think that's the same for us. So we haven't made any investments in either platform. I think we look at it sort of, skeptical awareness. With most of these things, there are definitely, viable use cases out there, but weeding through what those are right now are not expertise that we have in-house. And so for us, it's a little bit sort of, still unproven early to make any calls in the market.
So pretty consistent across the board there. Let's throw one out that might be a little more, let's just say, a little more argumentative, okay? Do we think that Florida can be competitive with the San Francisco, with the New Yorks, and with the Bostons of the world in terms of technology talent moving forward?
Switch it up. So I mean, I think we've had this conversation, many times. Are we ever going to be a Silicon Valley, or probably not, right? And I don't know that we should try to be. I think, Florida has its own strengths, just like all markets do. And I do think we've made tons of improvement, both in terms of the ecosystem and trying to begin to collaborate more. We need to do a lot more of that. And that brings in, good companies and talent. So personally, our companies haven't really struggled with finding talent in the various markets, and so we've been, quite successful in recruiting. So I think, good companies and good management teams are able to bring in the talent needed, to really sort of nurture and grow their businesses, here in our state.
So we believe talent is local, or is mobile, so talent can move. We're seeing something we haven't seen before, Florida funders, in the last really few months, where we've had Silicon Valley companies, San Francisco companies contacting us saying, hey, we want to get out of here and we're looking for a place to go, and it's not Austin. We hear you guys have great weather and great taxes. So, we're excited about that, and we think, that the best way for us to get some of this talent is really to recruit it. We do have some good talent here. By the way, a little anecdote, my nephew just moved from San Francisco to Fort Lauderdale to work for Magic Leap. I mean, that's something you might not have seen, 5-10 years ago. So to your point, Jennifer, I think we're making a lot of progress. We still have ways to go. I think Florida Polytechnic Institute, us having a real engineering school here, not to say Florida's not an engineering school, or UCF or USF, but a top-notch engineering school, the likes of an MIT, something like that would really help us and go a long way as well.
Yeah, I think it's important to sort of define what it is that we're looking for when we say, we want to be a Silicon Valley or we want to be a New York. Those areas have strong tech ecosystems because they built those tech ecosystems, but those had to start somewhere. It's, in our thinking, a confluence of having strong universities, of having accelerators and incubators in a supportive broader ecosystem, of having early stage investors, obviously the entrepreneurs who are front and center, having a collaborative approach to working with the public and government, and really using those building blocks to grow the ecosystem. There are ways, I think, of leaning into what specific regional strengths are. So perhaps in certain industries, perhaps with the fact that there might be like strong universities, and Florida has that with UCF, with Full Sail. There's a lot of opportunity to pull talent from those universities, but also you're seeing tailwinds around folks moving away from the Valley in New York because of just high cost of living and kind of very saturated markets. So I think a lot of those things push and are pushing Florida to really be a great place to start a tech company and to retain tech talent. I think it's a question of figuring out sort of, if you're looking at Orlando or Tampa Bay or Miami, what are the unique community strengths that you can lean into?
Yeah, so the simple answer for me is no, I don't think we're going to be San Francisco. I don't think we want to be. When I think about tech talent, it's too broad a term. So I think you have to break it down into the specific clusters that you're talking about. And in some cases, I think we're probably ahead. So if you look at a lot of space tech, we probably are actually ahead of places like San Francisco. Photonics and optics, virtual reality, particularly augmented training. So for me, I think the talent is going to follow clusters. It's not going to follow individual companies because there's a real risk anytime somebody's up and relocating that if it doesn't work out, they don't want to actually have to relocate again. And so I think we'll end up picking our clusters, and in those clusters we'll be highly competitive, but there's a lot of places where we'll just never compete with San Francisco, nor should we try.
Now, when looking at investments and investors from outside of the state of Florida, I just came from Atlanta this past week at Venture Atlanta, one of the biggest conferences in the Southeast when looking at venture capital. And it was the first time that I really saw in the Southeast New York-based, Boston-based, Silicon Valley-based investors. And I had a conversation this morning with Mitch from Deep Work, and he said, we don't want those investors here. We have our own investors. We want to keep these deals for ourselves. So I'd love to get everybody's take on this. Do we want outside investment? Are you guys seeing more outside investment from these hubs come down to Florida? And what's that competitive landscape look like?
Okay, so now I'll probably start to fight.
Push it.
So I believe that we want investors who understand how to build great companies. Right, and I think it doesn't matter where they come from. I will tell you our own experience is that we actually struggle with Florida investors. So probably 95% of our capital is not from here. They understand valuation differently. They understand stages of companies differently. They put different premiums on when a company goes post-revenue, which is there's a really strong pressure for post-revenue here. We've got a company in our portfolio that's a 10-figure company that is still largely pre-revenue. That just wouldn't happen if it was a Florida-funded community. So I'm not for or against Florida funders. I'm against, and I don't mean that. I'm for a set of investors who get what we're trying to do with our individual companies and will support them. And if we can find them here, it makes it much easier because when I have an investor day, they have to drive instead of fly. But I don't think about that distinguishing factor relative to what we're trying to do with our companies.
And are you seeing more investment from outside of the state come in?
Well, again, for us, almost all of our investment is from the outside of the state. So, we've put $7.5 million to work in the last 2.5 years here. 95% of it or more is from outside the state.
Yeah, I think ultimately this is up to the entrepreneur to decide what kind of business it is that they're building and what their vision for the business is. And part of that also entails thinking about what is the growth trajectory that you see for your company and whose money do you want to take? Because ultimately, different investors have different expectations of how fast you'll be growing. They can also offer different kinds of support. There are times, I think, when local investors are really great, provide really great capital, certainly at the initial stages to be able to evangelize you within your community, to provide that sort of necessary support in the early years. I think when you start thinking about whether or not to take, say, outside investment from out of state, much of it is a question of alignment of values. Are there perhaps strategic investors that would be helpful in expanding your business? Are there perhaps investors that you're finding from outside of the state that might expose you to a different network that would be really great? That is a good reason to perhaps pursue outside investment. But much of it, I think, is you can work and play well with investors both inside and outside the state. It's a question of aligning values around what you want the business to be, what kind of support you want, and the growth trajectory that you'd like to see.
I think all of us here are really committed to building the tech ecosystem in Florida. I think we share that common bond, and we believe at Florida Funders our biggest opportunity to do that is to awaken the sleeping giant of 300,000-400,000 accredited investors we have in this state. We're third in the number of accredited investors, only behind California and New York. But unlike California, to a certain extent New York, most of our accredited investors did not make their wealth in technology, so they're not prone to invest in early stage technology companies. So that's a mission that we're on at Florida Funders, to change that, to educate those investors and to turn more of them on. We have over 1,300 accredited investors on our platform today. So that part of it, I don't know if we need the outside investors. Right? The early stage, and most angel investing, if you study, it's done regionally. That's changing a little bit, but mostly, and I think some other, one of you brought up, you want to invest in companies locally, you can help, et cetera. Now, moving on to later stage investing, when you look at Series A rounds of 10 to 20 million, we definitely want outside capital. We want as much outside capital coming in at that stage, in my opinion, as we can get. We don't have a ton of 100, 200, 300 million dollar venture capital firms in the state that are able to write checks of that size, including us. Our average check size is about $1 million. So we definitely, again, want the people, Saxon, you saw last week in Atlanta that are from Atlanta or from New York or whatever, that are willing to put up 10 to 20 million as Series A. Again, we welcome them and need them, frankly.
Yeah, we agree. So we're also advocates of both. We've got great relationships, with all of the counterparts, firms in the state, of course, and have syndicated and co-invested on many of deals. The Florida Opportunity Fund specifically, part of its, mandate and objective is leverage, and that is bringing in outside capital into the state, into Tom's point, which is to write those larger checks at the later stages, the A, B, and C, and ultimately to exit, which is going to only benefit Florida. And so the more exits we can have in the state, the more opportunities we have to bring in that outside capital, and the state just becomes, overall more attractive to, all investors and other entrepreneurs specifically as well.
In terms of actual technology, this is something that I hear from a lot of people around the state of Florida. Orlando might be known for gaming, and Tampa might be known or starting to be known for cybersecurity. Miami, the gateway to Latin America. Is there one or two technologies that any of you all are seeing that really is just at the forefront and going to take Florida to the next level when it comes to this technology sleeping giant, Tom, that you're talking about?
I don't know the answer to this, but I'll take a shot at it. So we're uniquely positioned in Florida. A couple of people said we don't want to be the next Silicon Valley. We don't, and we're not going to be. So we all agree on that. What are our strengths and how do we play to those strengths? When I look at technology, where we can really shine, we've got the Space Coast, and obviously what's happening over there is very exciting. But we are right in the center of an aging population, and if you think about the technology around helping people to live longer, healthcare, and I'll just pick that one as an example. I think Florida is uniquely positioned to play, and I think there's a ton of, as an investor, I think there's a ton of wealth to be made and wealth to be created in investing in technologies that can help the baby boomer generation that's really just starting, and they're going to live another 30, 40 years.
I think, you touched upon gaming, of course, and some of the, regional expertise. I think I would add to that maybe ed tech, specifically, the K through 12 markets. I think you've got buy-in at the state level, right? So the legislature, that's certainly a mission of our previous outgoing governor as well as our new governor. And so I think if you've got buy-in at the top level, you've got a better chance of, getting the capital and the resources needed to actually invest in and nurture those technologies to ultimately, be successful.
Yeah, one of the things that we're really excited about is the strength of the computer vision and then AR, VR industries within Florida. And I think this was mentioned before, but Florida can really build off of the media and entertainment industry that is already very strong, but then again, also really strong universities that are just leaders in their field in these areas. And one of our investments that Rise of the Rest made during our bus tour, seem to always catch the train. A company called Immertech is actually focused on building VR for real-time physician training. And this, I think, was just a really phenomenal way of combining local Florida VR strength with just technology innovation and also just the healthcare industry, which is pretty growing in the state.
Yeah, for us, one of the areas that we don't hear as much about, but I think Florida is uniquely positioned to be a leader in, actually, is kind of the next generation of ag tech. So when you think about Florida as an agricultural state, it has a tremendous set of assets, not only in terms of production of food for our own use, but for distribution, the gateway that we have into South America. And that market is undergoing a transformative turn, particularly as Mother Nature is getting a lot more fickle. The ability to grow a lot of stuff outside is getting much more difficult, and we've seen it in Florida, particularly the southern part of Florida on the back of a hurricane. You have traditional agriculture that still isn't back yet, and so there's a lot of evolution. It's starting on, I think, the West Coast, but we have a unique opportunity, I think, to be a leader in it. It's going to require some things to happen, but that's an area we would love to see more of.
Oh, that's great. 4 different answers, 4 different great technologies that is really in a good place to succeed with. Let's switch a little bit. Let's get away from Florida. Let's talk about major technology trends. One thing that you can't turn on CNBC and not hear about is really anti-competitiveness in big technology companies looking at the Facebooks of the world. Should Facebook be broken up into Facebook, WhatsApp, and Instagram? I just want to get everybody's thoughts on that. Are these companies anti-competitive? And just talk about big tech and politics right now.
That's a lightning rod. So, I mean, my general view on big tech is there's a set of behaviors that they should be able to benefit from because they built the platform to get there. And then there's a set of behaviors that they shouldn't. And if you look at Microsoft as a generation before it, right, they should be able to build off of the operating system that they created and the Microsoft Office structure, but the way they treated, folks like Netscape was inappropriate. So I don't know that they should necessarily be broken up, but I think they should actually follow the rules.
I think it's important to remember that ultimately antitrust policy exists in order to protect capitalism and competition and the integrity of the market system. So any time when there are companies that might have too big of a share of the market and maybe engaging in more monopolistic behaviors, it is really up to the regulators and a question for public policy and how to address that and make sure that small businesses and startups are able to compete on an equal footing within the ecosystem through the market. And ultimately, that is what those kinds of policies aim to support and aim to promote. And the regulations, I think, are always going to follow some of these innovations because that's just the nature of how these things work. But the question is, how can we preserve the spirit of innovation and of the ability for companies, and especially early stage companies, to have a fair shake at being able to grow their businesses without sort of losing the fight very early on?
For me, this is a little different because I've been an entrepreneur most of my life, and I competed against companies much larger than my company, and I always welcomed that because they were bureaucratic and they moved slowly, and we could be more nimble and faster. And if you look over time, I mean, these Fortune 500 companies, many of them have gone away, and every decade this changes. So bigger is not always better, and if they're playing by the rules, and they're, to some of the previous speakers, if they're not being monopolistic, if they're not being antitrust, if they're playing fair, then I'm a capitalist. Let them do it. But if when I say Alexis, order me batteries, it will only send me Amazon batteries, that's bullshit. I should be able to get my Ever-Ready batteries. I should be able to get but that's the way it works now, right? So some of what they're doing, and if you look at Google and how the paid search works, there's definitely stuff that they're taking advantage of and working the system. So, I'd like to see that cleaned up, but no, I think they'll be their own demise. Big companies over time take themselves down. We don't have to take them down.
Yeah, not really anything new or novel to add to what's already been said.
So I'm going to go off the script here a little bit. This was not a published question, so sorry. Want to talk about big data, because this is, you saw them before? The big data, this is something, obviously, you have Europe making a huge push with GDPR, assuming that you might see more in the United States. Do you all think that there is a play for the commercialization of individual data? I mean, talk about the data that these companies are getting from us from a personal standpoint. Do you think there's a play where individuals will own their own data here in the future?
I think actually pretty soon. If you look at, again, particularly Europe being in the lead, right, there will be an expectation that they will have to get paid in some way. Because if the companies are monetizing their data, they're going to force that to be shared. It's a little bit of the culture of Europe. I actually think it's a great idea to be able to do that and allow people to make their individual decisions. And then I think there's elements of personal data, for example, that you don't have control of, but you should. So things like an electronic medical record, right? I think there will be an evolution where you actually own your medical record, your doctor doesn't. And so you can transport it from physician to physician, and you don't have to grab 15 pieces of information in order to get your next doctor up to speed. So I think there will be both opportunities to get paid, and then there will be solutions that actually enable people to own their own data and make it portable.
Yeah, I think that it's interesting and very early on this front, but the general idea of what your work is, what your output is, and whether or not you should be able to be compensated for it is increasingly changing. And I think there has been more and more discussion of the fact that when you're putting data out there, it is kind of your labor and it is your work, and perhaps you should be compensated for it. I think it'll be interesting to see how that sort of formulates itself, and if this goes forward, what it would look like. But I think more broadly, we are due for a sort of rethinking of, like, within the digital age, what does product and what does labor actually mean, and how do you ensure that the person that's producing it is able to have ownership of it in an appropriate fashion.
Yeah, I'm not there on this one. I will admit I thought Uber was a stupid idea when I first heard of it, so maybe I'm wrong here too, but I don't think anybody's individual data is really worth very much. I think it's the aggregation of that data, it's the analysis of that data that really where the value's added. So I don't see this, but maybe I'll be wrong again. Who knows?
I think there are certainly opportunities to someone to monetize the data that it's being collected, but I still think it's, like Tom said, a little bit too early to determine who the best parties are to do that, right? Who the best parties are to control that, whether it's us as individuals, companies. There's going to have to be some regulation, surrounding that as well to ensure that EMR and personal information is actually maintained as personal.
One thing while the microphone's going by, I'll jump in here. When we were talking about the big tech, the one thing we didn't hit on, or I didn't hit on, was really the control that Bezos, Zuckerberg, and a few other people have of media and of what's free speech and what gets published. That's a whole different animal. Those players really scare me in how much they're controlling media and what gets censored. To me, as a consumer of that information, whether it be left wing, right wing, and how that's being handled, I'm very concerned about that from the big four.
Any other thoughts on that? No? Okay. All right, I want to talk about artificial intelligence. This is something you can't go a day without reading or hearing about. Growing up, a lot of individuals my age are used to movies like I, Robot, and you see robots taking over the world and the planet. I think that we're all at the point where we know artificial intelligence will play a role in our lives moving forward. Is that a good thing? Is that a bad thing? Where do you all see the job market going with artificial intelligence? Do you think this is going to replace the human element? Where does everybody stand on that?
Well, so at least for our investments, and we have a couple of investments in the AI space, there's the robot that can think for itself and is kind of replicating a human. I think that's a long way off, and I don't know whether I like it or I don't like it. But when you look at kind of a step back from that, there's a ton of things that are happening that you could call it tech-enabled or you could call it AI. Right, but we're in an agricultural business that does big data processing to read the environment in the room, and it changes water and air and carbon dioxide and nutrition on a regular basis without having to have somebody go in and make that decision. Right, we have another company that we've invested in that is basically facial recognition that's used in a lot by law enforcement to actually help enhance the likelihood that when something is being reviewed, we're doing it now, right? The detective is still looking at the video and trying to make a determination as to who that person is. Now you've got technology that will enable you to do that better. To me, if AI becomes tech-enabled, I don't know how you not do it, right? It's just an enhancement and efficiency component. Whether it goes to the think for themselves, I'm not there yet.
Sure. So as far as AI and automation and the effect on work, I think that there's technology that can augment human labor, and technologies that make it easier for workers to do their jobs or really supplement their work are really great and just aim to support workers and help them be able to just do their jobs perhaps easier and perhaps better. I think then there's also technology that at some point removes work. And in those cases, we have to take a more collaborative approach between the public and the private sector in thinking through Do we retrain workers? Who can actually be retrained and how? Do we have enough of a sort of a net for folks if they are placed out of work? And this might be a more and more pressing challenge as AI sort of speeds up in its impact on work. And we have to really start thinking about that much earlier on. I think more broadly, the question is how do you think about this ahead of time, and how do you make sure that the way that we're thinking about the impact on work and on laborers kind of first and foremost in front of mind for the entrepreneurs that are building potential technology, as well as for a lot of political economists that are currently thinking through what does it look if we have large scale kind of automation, and how do we kind of manage the efficiency and productivity gains, which can be really great, with potential displacement and disruption in the labor force, which will force us to effectively have to take a broader view of how we provide for some kind of social safety net and retraining possibilities.
Yeah, clearly, well, being around technology for a long time and having the gray hairs to show for it, there's always been this challenge with new technology. Is it going to take away a lot of jobs? And heretofore, technology seems to have always created more jobs than it's taken away. Will that change with AI? Clearly, we'll need less truck drivers 10 years from now. Clearly, we'll need you can think of a lot of other jobs. And by the way, they're not all blue-collar jobs. I was in Israel 18 months ago and saw AI technology that read MRIs and saying we're going to need a lot less radiologists. So it's going to affect a lot of different parts of the labor force. It scares me because unemployment scares me. It always has. I think I believe in hard work. I believe in having people employed. I think when you have a lot of people not working, that's not a good thing. There's a lot of studies done on that. And I think paying people when they're not working and thinking that, I think Peter Thiel said that or somebody said that was ridiculous. That doesn't work either. So it's going to be really interesting to see. I'm still hopeful that AI will create more jobs than it displaces, and that the truck drivers are displaced are going to get challenged to do maybe retrained or do something more creative, and if you believe in human beings, we can always find ways to do things and create things and make things better, I believe. So I'm hopeful, but I don't know.
I think it's here, right? And it's certainly evolving and is definitely going to be a part of our today and certainly our future. That being said, there are still a large number of jobs that just require human interaction. And so those aren't going anywhere either. So the reality is, and people are starting to focus more on that, right? Service matters, and how you treat your customer, how you treat, individuals. And so I think, right, those are the things that we're going to have to continue to focus on and teach, right? Rather, because while there's still this huge education of you've got to be technically advanced, you've got to be focused on that. But let's not forget about the human element, because that's equally, in some cases, even more important. And I think we're starting to lose a little bit of that because of, these types of things.
I'm going to ask one more question, and then we're going to go out to the audience. In terms of private market valuations and money that's flowing into the private market, we saw a bunch of companies just get absolutely hammered in the last quarter in the IPO market, on the public markets. Where do you guys see valuations going, and sort of what does that look like moving forward over the next few years, whether it's Florida, Silicon Valley? Obviously, Wall Street will determine a lot of that once gone public, but would love to get your feedback on the private market side.
So we tend to sort of stay away from the valuation game. It's all negotiable at the end of the day. So I think, we've certainly seen hot deals have, crazy valuations and things like that. But we're also, educating our entrepreneurs and vice versa. And so I think at the end of the day, they're all been flexible, and we've been able to sort of navigate through higher valuations. And I think generally they're sort of becoming to be a little bit more realistic, because folks at the end of the day really want to get the businesses funded and on to the next level so that they can get back to what they're really there to do.
Well, if you think about WeWork, if you think about Uber's off, 30% from their IPO, the public markets are saying the private markets are overpricing stuff. My belief is that the private markets are continue to overprice stuff until there's less money available. There's just so much money out there with SoftBank and these, the Silicon Valley VCs having raised such large funds that they have to put to work, that it's a supply and demand. So until that gets corrected, I don't think valuations will change a lot. Although, I think the perception is, when you see what's happening on with these IPOs, that, it would have to come down.
I think given the public market reckoning that happened over the course of this past year, there's been more and more discussion of what the valuations, these like very high valuations, are actually based on. They might be appropriate for some more software technology companies, but especially in areas like consumer tech, there are some companies that are sort of labeled as technology when they're not necessarily technology. And I think there will probably be more of a kind of critical thought as to what are the unit economics of the business? Can this business actually reach profitability? What assumptions do you need to believe for this business to be profitable and have a real sort of shot at profitability? I'm guessing that this will hit growth equity investors earlier than it will more early stage investors. That being said, I think the broader discussion around, what makes a business an actual business, and do you have the assumptions and the unit economics to back up, what you're building, rather than just growing extremely fast on the revenue front, but really not seeing a path to profit, is going to be key in determining some of these valuations. I'll also just say, on a sort of different note, we're seeing like much higher valuations in the Valley in New York compared to other parts of the country. This is something that I imagine will probably stay relatively steady, and it provides a great opportunity for local investors and certainly outside investors to come and invest in other parts of the country.
Yeah, I would break up the discussion about private into a couple of clusters, because I don't think you can say private is overvalued. So we actually wrote a white paper recently on Lyft as a case example. So I think the mega deals are way overvalued, because what would have happened 15 years ago is they would have gone public long before they did. And the price discovery would have occurred in a much more robust way. Because they're private, you don't have that same level of price discovery, and any individual transaction at the end kind of resets the value for everybody. So, thank you Sarbanes-Oxley, thank you Dodd-Frank, and a whole bunch of other reasons why people don't want to go public. But that, I think, is really what's driving the mega deals. And I think that will right-size itself as a whole bunch of these land. And then the flip side is you get something like Beyond Meat, who goes public, and like they're up 9x. So you would potentially argue that valuation wasn't right. I think in the middle market, and then particularly in the small market or the early stage, it's a supply-demand component relative to the companies that are looking at the investment. And so when you look at New York and you look at San Francisco, it's really high in terms of the valuations. Chicago's kind of in the middle, but I'm a big fan of kind of the investment thesis behind the rise of the rest, which is there's a ton of ecosystems out there where the valuations are actually way too low. And in fact, I think that tends to hurt those companies as they try to actually go into Series A's and Series B's and Series C, because in many cases, those are actually triggered off of what your first round was. And so I think it's not as uniform kind of the farther you get toward the early stage. But the mega deals, like, they should have gone public a long time ago, in which case you wouldn't have that kind of inflation.
All right.